One in two households with a mortgage was left in the red last month, with new data revealing homeowners in our west and southwest are struggling to make ends meet.
All we hear about the housing crisis is price fueled by supply. But a silent disaster is unfolding and no one's talking about it. For years, Western Australia was the mortgage delinquency capital of the nation. But that has changed. The epicenter of mortgage pain has shifted. It has moved east. And if you live in one specific postcode in Victoria, you are now living in the worst hit suburb in the entire country. According to new data from S&P Global Ratings, mortgage arrears, people who are 30 days or more behind on their repayments, are exploding in areas we used to call affordable. In the worst hit suburb, nearly 3% of all households, that's 1 in every 33 homes, are behind on their mortgage. That is not a statistic. That's a problem. In this video, I'm going to show you the exact suburbs where the Australian dream has turned into a debt nightmare, why Victoria has taken the crown nobody wants, and the scary prediction for where this goes in 2026. Let's look at the data because the change is brutal. Back in 2020, 7 of the top 10 worst performing suburbs for mortgage arrears were in Western Australia. Western Australia was suffering from the post-mining boom bust. Property prices had crashed and people were stuck in negative equity. But fast forward to 2025 and the map has completely flipped. Today, Western Australia's arrears have dropped to just 0.86%. They're safe. But the danger zone is now Victoria and New South Wales. Specifically, Victoria. Yep, the state of Victoria is now the undisputed champion of mortgage stress. The state has an arrears rate of nearly 1.2%, the highest in the nation. It is the only state where the list of worst suburbs is actually growing. Compare that to Queensland at just 0.59%. If you're in Brisbane, you're feeling a little pinch, but if you're in Melbourne, you're drowning. But where exactly? Here's a quick message to subscribe to the channel. It encourages me to keep going. It's time for the reveal. Let's see if this comes as a shock. Postcode 3064 in Melbourne's outer northern suburbs. Craigieburn, Donnybrook, Roxburgh Park. According to S&P Global Ratings, this is officially the worst performing mortgage belt in Australia. More than 3% of prime home loans here are in arrears. But why here? Because this is where young families moved and migrated in 2020 and 2021 when interest rates were tiny. Remember that? Feels like a long time ago now. Rates climbed at the end of COVID, and those variable rates have tripled. And because these households have massive loans relative to their income, they have no buffer left. It's interesting, as a mortgage broker, prior to submitting any application, we show people what the weekly, fortnightly, or monthly repayments look like and ask how affordable this feels. Then we show them what it looks like if rates rise and ask the same question. But it's not just Melbourne. New South Wales takes a medal too. Here's the top 5 worst performers this year. Number 1, postcode 3064, Craigieburn and Donnybrook, Victoria, 3.1%. Number 2, Baulkham Hills, New South Wales, 2.48%. Number 3, Pakenham, Victoria, 2.41%. Number 4, Casula, New South Wales, 2.27%. And number 5, Berkshire Park, New South Wales, 2.2%. In early 2025, the Craigieburn and Donnybrook area was the worst in Australia and remains that way. The big mover is Pakenham, located in outer southeast of Melbourne. This area was ranked as the 7th worst in Australia back in early 2025, but has now jumped to 3rd on the list of worst areas for mortgage arrears. Melton in Melbourne's outer west is also a watch at 2.1%. Victoria has a problem. According to the Reserve Bank of Australia, borrowers in Victoria specifically have larger loan sizes and smaller cash buffers compared to any other state. That's a toxic combination. So, why is this happening now? It's not just interest rates, it's the cost of living. When your grocery bill is up 20%, your insurance is up 30%, and your mortgage has doubled, something has to give. In the mining towns of Western Australia, people lost their jobs, and that caused the arrears. But in Melbourne and Sydney, people have jobs. Unemployment is low. They are working, but they still can't pay the bills. That's terrifying. So, where does this go? If things continue this way, we are looking at a two-speed Australia. Sources like Fitch Ratings predict that while interest rate cuts might arrive later in 2026, it may be too late for these families. We predict a surge in distressed listings in these specific postcodes because even with rate cuts, it simply does not save enough money. If you are looking to buy, these suburbs might see price drops as desperate sellers exit. But that comes down to the number of properties hitting the market around the same time. The Australian dream was to own a quarter-acre block. For thousands of families in Craigieburn, Pakenham and Western Sydney, that dream has become a financial prison. The shift has happened. The pain is no longer out west. It's right here on the eastern seaboard. Are you seeing the for sale signs go up? Let me know in the comments below. If you want to stay ahead of the market and not get caught in the trap, make sure to subscribe.